All right. Hey, everyone. Yeah, I'm here. Can you guys hear me? Just want to make sure. Make sure you guys can hear me all right. How you guys doing? Can you guys hear me? I'm just going to give it a second here. Okay, hey, okay, cool. All right, just wanted to make sure. Hey, how's everyone doing? Mark here. I want to thank you for joining me for my live stream. If you're new to Greenbridge investing, make sure you visit greenbridgeinvesting.com and check out our active investor chat room. We also do swing trade signals, portfolio ideas, and analysis. Okay, we share a lot of information. Also, if you're new to the channel, make sure you like the channel or like the video and subscribe to the channel. So every time I do one of these, you get an email notification from YouTube. Again, I'm trying to make these more educational as we go. All right, so first thing I want to do here is let's get this thing moving. We have our podcast today, so I can't spend a lot of time today with this. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, we're going to go into our regulars like I always do, but I want to make an important point about the Nasdaq, and that's why I gave this thing the title Nasdaq 11,000. Now, before we get into that though, as you know, today is Monday, and on Monday we have to go over this very quickly because we want to make sure that we're aware of any important reports that are coming out this week, especially for Forex. Okay, so let's take a look here and see what's going on. I'm not going to spend a lot of time on this, but so what do we have starting out? Today, with the British pound? Okay, not that important, and that's probably out. ECB bank lending survey? No, none of this stuff's important. Okay, now tomorrow, 7/14, right? We have consumer price index. By the way, sometimes this calendar is a little inaccurate, I found, because I get my information from here and then I find out something else actually. The date changes or something. So you got to be careful with these sometimes. But again, consumer price index, I'm not going to make a big deal out of this. It's usually not a big deal. Okay. Now for 7/14, we also have the Swiss National Bank Chairman Jordan's speech. Now that can move the franc a bit, and the franc is in an interesting position. We've been interested in a potential long, but it's been tough because the dollar has been getting weaker against the other currencies, and it's just this pair is just a pain. So with this kind of information, we probably will avoid that. Now the yen has their interest rate. Japan has their interest rate decision. Now that can move Forex markets somewhat because that's a pretty big currency. There's a lot of pairs against the yen, and the yen is also seen as like a stable currency, right? And that's why you have these. That's why it sort of emulates the S&P. If you look at the dollar yen pair, it's very similar. Okay, so Bank of Canada also has their rate decision. Again, I'm not a big fan of that currency. It doesn't act very well, at least for our swing trade strategy. There's better opportunities out there, so I wouldn't worry about that. And then New Zealand consumer price index, Australia unemployment rate. Okay, now the Australian dollar is basically like another proxy for the S&P. So, I mean, we don't have anything in that, but it's good to be aware of what's on the 15th. So that's in 2 days. What is that? Wednesday, right? And then I don't really see anything else here. So there's really nothing major. I don't see any FOMC. I don't see any NFP. NFP is always the first week of the new month anyway. So again, just want to get that out of the way. So there's really nothing on the radar there. Okay, I don't see Chairman Powell with any speeches, and that's really what I'm looking for. Okay, now let's get into this market here and let's talk about the best practices for the Nasdaq. And then of course I'm going to go over the regular symbols. If you guys have any symbols that you would like to see, put them in the channel now. Okay, and so when I get to that part, you can't hear anything. Okay, I'm not sure what that's about. Let's see, did I turn my sound is still on. So, okay, maybe you need to reset the channel. I don't know. Can anyone else just let me know if anyone else can hear me? Just put a yes in the channel or something. Okay, now what I'm going to go over here first is actually let me pull the Nasdaq up here. Hold on. We go to Forex. Oh, okay, no problem. All right, so I want to go over this thing first, okay? Because obviously there's a lot of craziness going on. And so like I said, if you guys have symbols that you'd like to see, please put them in the channel now so that when I'm done with my analysis, we can get into your symbols as well. Because I mean, that's the whole point of these videos is I want to show you markets that you're interested in also. Okay, so now look at the Nasdaq. Now the point of this video, right? Best practices for a frothy market. That's the title of this video. Why did I call it that? Because the Nasdaq, since this date right here, was that June 29th, June 28th, has gained 1,000 points. Okay, what was it? 2 weeks? That's ridiculous. Okay, ridiculous. Now, why do I say that? Am I biased? Am I angry? Why do I say that? Because it's not realistic. Okay, now, I've been doing this long enough to understand what realistic is and what is not realistic. The reason why it's important to understand, to have that kind of perspective, is because momentum like this is not sustainable. That's why I say it's ridiculous. And what like I saw a comment in the free chat room about Robinhood traders, and I mean, who do you think is buying this? I don't mean to give like a negative comment or a negative feeling toward Robinhood traders. In fact, the video that I watched with a top proprietary trading firm, the guy that was making the video put it very eloquently, and he said that Robinhood traders serve an important purpose for his firm and how they use that information to find opportunities. He put it in a very nice way. But basically what he's saying is Robinhood traders are taking the other side of their trades, and that's how they're making money. Okay? Robinhood does serve an important purpose. It does bring a lot of new capital to the market, capital that doesn't know what it's doing. So I bring that up again because who do you think is chasing this, right? This is not normal. And when it retraces, what typically will happen is people are going to start buying the pullback too early. And that's what I want to point out here. Now, first thing is right off the bat, look at this. Look at today's candle, the way it is right now. Okay, we have 2 hours, a little less than 2 hours before this market closes. Right, DJ. Well, that too. But Robinhood right now has taken the place of, 20 years ago, it was E-Trade, Ameritrade, and all those type of brokers. That's who the retail trader was 20 years ago. And they were just throwing their money into the market. And people that were with a more sophisticated firm, like where I was, we had a huge speed advantage. So when they were pointing and clicking and buying their 100 shares, basically we were using that liquidity to get out of our positions, right? That's how it works. I didn't make this up. So anyway, look at this pin bar. All right, you see this pin bar? Not a good sign. So a frothy market, for those that may not be familiar with that term, is when things get too overheated, too overbought. Now, I am not saying that we're going into a bear market. I have to repeat that because people may think, well, if it's not going higher, then it must be a bear market. Not a bear market. And it's not. I'm not saying we short this, although this is a nice setup for an aggressive short. I wouldn't be surprised if Andrew does another IWM short call trade on something like this. But this right here is what a peak looks like. It's a bearish pin bar. Now, of course, we have to take out the low of this tomorrow, right? So 10,850 is the low of this candle. So, of course, to activate that, you would need to do that first. But my point is this. The best practices, what are they? When something is pushing highs like this and it's all over the news and everyone's all excited, the best thing to do is stay out because the risk here for buying is extremely high. Also, for shorting, it's also risky as well because who knows? This market, the strength may not be over. There's no way to predict where the top is. But my point is, you have to look at the probability or the risk of retrace. That's what you have to look at. And what that is basically how much potential does this thing have to go further? Again, it's gained 1,000 points in 2 weeks, compared to pulling back. Just like that link chart that I put on TradingView yesterday. very similar. So doing nothing is the safest thing you can do, because the higher it goes, the more conservative you want to be, not aggressive, okay? So in situations like this, so one best practice is, don't overload positions. Take profits if you have them, okay? If you got into some trades along the way, I mean, as you see, we do it all the time in the chat room, right? We take profits the whole time. We're just rotating. Take profits while you can. This market is great for that, all right? But let this market provide a better opportunity in terms of reward risk. Because the third best practice that I want to mention here is you should always be measuring reward risk. Because maybe the probability, maybe that may be a hard concept to understand in the beginning. Like, how do you gauge that? Because I don't have like a mathematical way to do it. It's just, I do it basically on location and from experience. But the thing is, as far as reward risk, you have to say, okay, if I bought this thing right now, or if I bought stocks, so you see a lot of these stocks that are at ridiculous highs, okay? And we'll pull up a couple of charts, but they all look similar to this. If you buy this, if this was a stock and you bought this right now, where is your risk, okay? Like, how much where do you get out if you're wrong, basically? Where's the first support? Well, you have a very minor one right here. This is very minor because you have this little double bottom right here, okay? So you can use that as a reference point. That's 10.5. 10.5. So you're looking at, in this case, at least a 300-point pullback if you're wrong, and that's the first reasonable place to put your stop. So right off the top, you're risking at least 300 points, in the Nasdaq. All right, if this were a stock, and there are stocks there are many stocks in similar positions. The next point after that would be here, this old resistance, okay, which is what, 10.200. I talked about this in another recent video, 10.200. So if this clears and I'll hold it, I'll give it some more room. Well, now you're looking at 10.200. Okay, so you're looking at like, over 500 points worth of pain. That's not worth, how much you're going to make if you're right. What's this thing going to run? Another couple 100 points? Maybe, right? So you see, the reward risk does not make sense. Now, if it pulls back to an inflection point, let's say it pulls back to this 10.850 and gives a reversal. Okay, now we have a better place, a better reward risk, because there'll be some potential now to at least test the high, and we could put a much tighter stop because we'll have a structural reference point. Okay, so those are the three best practices that I really just wanted to put out there, especially for those who are new and who are maybe confused by this market, because, a lot of people, at the top, it looks its best, and they're like, oh, this thing's going up forever. I don't want to miss out anymore. I better start buying stuff, and you buy the top. Okay, so just keep that in mind. You want to be looking for lows and pullbacks, and this market barely pulls back. So maybe we'll get another small pullback. I don't know. The thing is, it's got to do something. It's got to show us a better location and a better reward risk. Okay, so I just wanted to point that out, and that was the key point that I want you to take away from this. All right, so with that being said, I'm going to go into my other markets here. All right, again, thanks for putting your stocks in the chat here. If you have any other, if you're just joining my chat now, make sure you put your stock in the chat so I can go over it. Also, I just want to mention that if you're new to Greenbridge, make sure you check out our website at greenbridgeinvesting.com. Okay. Also, we have our podcast today at 4:05 p.m. Eastern time, and hopefully the sound works this time. So make sure you check that out as well. It's going to be on this channel, and we have different things to talk about on there. All right, so let's start with Bitcoin. Okay. By the way, before I even get into Bitcoin, before I even get into that, let me show you this. Hold on, where is it? Let me show you this. Look at that. Look at this. What did I write? What was the title of my TradingView article yesterday? Linked to the herd mentality, right? Because I think I'm clever with my titles. Okay, look at this. I mean, wow. Okay, talk about a bearish pin bar. Good thing you didn't buy the top, hopefully, right, at $8. This is really bearish. I would not want to be long. But again, this is the herd mentality. And that's why I said, in the video, I want to see a pullback to that $5 area for, a potential buying opportunity. That's where the opportunities are, not chasing these type of things, okay? Anyway, just want to point that out. Let's get into Bitcoin. So, Bitcoin has been putting everyone to sleep. Look at this thing. That's why I didn't even write about it. I looked at the chart yesterday. I'm like, man, I almost fell asleep just looking at the chart. So I'm like, why am I going to write about this? No one's probably going to read about it, right? So look what's going on though. So again, this is actually a very good sign for our swing trade that we have from 92 and a quarter. We got these higher lows, right, presented by these pin bars here, and we're not getting any momentum. That's the thing. We're still in the range. We're kind of fooling around in the middle of the range. The current location is not a good place to start a new position, right? So we just let what we have ride, and that's all we can do, right? Our risk is defined, and nothing has changed. Support is still 8,500. That's the main support. Then we have one at the 76.95, and this resistance level, this zone, 95.64 to 10.168, it's still intact. So at some point, you know, Bitcoin's going to have to make a decision. Most likely it'll come on some news that was unexpected, and you'll get a big green candle, and then the next thing we'll have to do to prove itself is follow through, meaning it needs to continue to push through this resistance and close above. When we get that close, that's when we can anticipate, you know, some follow through and a nice breakout. Because remember, you have short covering, you have people getting margined out, and you have new traders jumping in trying to buy that breakout because, you know, everyone's going to be saying Bitcoin's going to 20,000 at that point. Okay, you know, we don't have wild and unrealistic expectations like that. We have our targets in place, and it's just a matter of waiting for them to get reached, and that's it. And if they don't go there and we get stopped out instead, we just wait for another buy signal. Because again, Bitcoin has not changed. This structure is still a higher low in a broader bullish structure. Okay, so I'm sure all of you, I know all of you are regulars here, so you know that story. I'm just putting that out there for people that may be new who are watching the channel. Okay, so let's get into what's the next one I usually go over. I did the Nasdaq. Let's take a look at gold real quick. Okay, and then we're going to get into your stock symbols. Let's see. So gold, XAU, USD. Look at this. I was very open to buying this right here. This is my old trade that reached its third target at 18.50. I have to remove that text. But the thing is this, look. These two little bearish candles went nowhere, right? This is a typical buy setup, and actually it's fooling around that buy trigger right now. So I'm not opposed to taking this. This would be a very aggressive swing trade long because it's such a vulnerable location. But gold, there's no question, it's strong. So you're buying something that's strong, that's likely to push highs, right? So, and also the risk can be defined either by this point, which would be tight, 1794, or this point right around here. What is that? The 1760s, 1750? That's much wider. You know, so we'd have to evaluate our targets and see if it makes sense to see which one the stop would make more sense at. But I'm not opposed to sending out this trade idea perhaps at some point today. You know, we'll see. But I mean, it's strong, right? So keep an eye out for that one. It's a possibility. I saw someone ask about silver in the chat room, and silver now it's starting to move, but silver is probably much better is a better candidate for buying physical rather than paper. Okay, we've talked about that in my webinar. So all right, that's gold, and let's go over one more euro. Let's take a look at the euro. Okay, as the pound is starting to get a little ugly there. Look at the euro. So we're still in this trade here, right? We're still in this swing trade, and it's been a pain. But we're used to that. I mean, gold was a pain for a while before, you know, we got our 100-point move in it. It took like a month to get that, right? So the euro at this point, it's in good shape, okay? We like the consolidation. It's a broad higher low. And this, what you're seeing here in the euro, I mean, this is what we're looking for out of Bitcoin. Eventually, this is the type of situation. It's the same idea. We're starting to push this resistance here. This is good. So, you know, again, we're in our position. We just let this thing ride. And this thing, once it takes out the high of this range, you know, this thing should have no problem reaching its targets. I mean, we're pretty confident with it. It's reached target one, so our risk has been reduced, right? That's why we could sit through these red candles without even worrying about it, because our risk is just smaller. And even if we give back, even if the thing goes back to break even, at that point, the trade is actually somewhat green because we closed 1/3 of it for a profit, right, at 13.50. So just let this thing ride. It's on its way to breaking out. Buying it now is risky because, you know, if it fails to follow through, now you got to take all that pain. Why take that pain when, you know, if you just wait for an opportunity, it's much easier to hold. You want to be in when these moves are happening, not jumping in on those breakouts. Those are very tough, especially with Forex. I mean, look how many times it's tried to run and then fail. And when you're in a weak, when you are a weak hand, meaning you just bought and this thing turns as soon as you bought it, you're going to have a tighter stop. You're going to be less confident because you go, I think I just bought the top. Psychologically, it's just not a good location. You want to be in from a pullback of some kind, right? And that's when we got into it, even though it was noisy. Anyway, so that's the euro. It's in good shape. Let that thing ride. And by the way, that's the inverse of the dollar franc. So when I see something like that, it's like, all right, I was sort of interested in buying the dollar franc, but forget it now. Not when I see the euro doing that. All right, so that's it really for my markets. Was there any other one I wanted to talk about? I mean, the stocks are going nuts. So let's see what you guys have here. All right, so Ricky, gold. Okay, gold stocks are in a pullback and not really following along. It's just a bit concerning for them. I'm currently long them. Well, okay, gold, so gold is generally strong. The stocks aren't going to move with gold 1-to-1, the gold stocks. So you just have to be patient with them. I wouldn't worry about the gold stocks as far as getting out. I mean, hopefully you've taken some profit along the way. And if gold pulls back, we're just going to be looking for a buying opportunity. So the stocks just require a lot of patience. You're just better off holding on, and you're going to have to deal with some noise. But I just would find it hard to believe that gold will go back and retest 1700. So the gold stocks, remember, as long as gold stays stable, they shouldn't pull back too much. That's the way I would deal with it right now. Just be patient with it, okay? POW, let's see. Okay, let's see what you got here. A couple of symbols here. ZUMZ. Okay, I'm not familiar with that one. All right, let's take a look. So this stock is fooling around $25. Ooh, this is nice. Where'd you find this one? I like the location. Very nice. So what you have here is you have this old resistance back here, which is what, 22.89. So basically 23. And that's right now is your general support area. Now, on top of that, you have this double bottom situation. Within a consolidation, this consolidation is a higher low. Very nice. I like it. Now, what's the low here? 27.85. So you figure around 27.50. And that zone between 27.50 and this high here that we talked about, this 23 area, right? That zone probably will act as a nice support area. So what do you do with this thing now? Well, I see a little buy signal going on in there. Let's open this chart up a bit, right? You have this reversal candle. There's no reversal pattern. I mean, this is a candlestick pattern, but I don't, there's like 50 of them. So I don't sit there and I don't want to confuse anyone. We don't need to know the name of it or anything. It doesn't matter. What matters is you have a support and you have a green candle, okay? And it closed. Now, today's candle, you're taking out that high, 25.92. So that's a buy signal that's in play, and you can measure your risk at basically 25. So you're risking about $1 there, something like that. You should probably give it a little more room, like $1.50, perhaps. And your potential, you're looking at what, 28, so $29. So you're looking at about maybe trying to make $3 or $4 reasonably over, the next week, relative to risking about $1.50. That makes sense, okay? Not a bad idea. In fact, we'll probably talk about this on the show today. I'm gonna use this one on the show. It's a nice example here. Nice. I like the setup. I like the location. I like the reward risk. The only thing that you have to be careful of, because again, I don't know how sensitive this is to the rest of the market because I'm not familiar with what sector it's in. But what you have to be careful of is that Nasdaq position. Obviously, this is a Nasdaq stock. So if the Nasdaq has that broad pullback, we saw the pin bar that's starting to develop. How will this stock behave? Will it just take out that support? Are you going to get caught in that? Because if the broader market pulls back, it may affect this thing. That's what you have to be careful of. Now, if the broader market pulls back and this thing doesn't really pull back much, then it would be an even better buying candidate. Okay, does that make sense? So I would keep an eye on that. Now, so another way to play this, because this is a setup, and the market is generally strong. So one thing you can do to compensate for that broader market risk is a smaller position like that. And that's always a great alternative. So instead of 100, let's just say you buy 100 shares normally. in a situation like this, maybe you reduce that and say, okay, I'm only going to buy 25 shares. So if the whole market pulls back, I get caught with 25 shares, I can handle that kind of pain. It's not a big deal. Okay? That's rather than, I bought 200 and now this thing's pulling back $2, the whole market's pulling back, I don't know what to do, I'm getting stopped out and I'm losing all kinds of money. Right? So that's what you have to watch out for. And that's one way to compensate for it. Okay? So you with me on that? Okay, cool. All right, so hold on a second here. Just give me a second. Okay. Now, so that's that one. Now let's take a quick look here. What was the other one you had here? American Express. AXP. Right? Okay. So American Express. Oh, interesting. Well, you must be learning because you're always picking these things that have some nice setups. Great situations. I think someone brought this up not too long ago. Maybe it was you. But similar situation. Old resistance, new support area. As you can see, it's not exact, right? It doesn't line up exactly, but this is behaving nicely in an attractive location. Now, this is more of a market stock, okay? Also, you have a failed low. These two lows are not much lower. This low is not much lower than this low. You have this nice outside bar situation, and today you're higher than yesterday's close, or you took out yesterday's high. So nice situation here on AXP. Again, got to watch that S&P 500 though, because if that thing pulls back, this thing will likely feel it. But where is your risk? Well, 89.86. So you figure 89.5 is where you're measuring your risk from, and this thing is fooling around at 95. So you're looking at $5 or $6 worth of risk, okay, right from the start. And reasonable potential 106. So it's about 2-to-1 reward risk is possible, and that's within reason. It's not even assuming new highs. It's assuming a test of the high, okay, which is within reason. So I like this as a buy candidate as well. In fact, I'm going to bring this up on the show as well. I like this. You must be following. You must be really. You must be learning from my stuff because you're picking things that we would buy. So nice. Okay. So let's see what else. VLO. Let's take a look. Now this is one that Andrew always talks about. So VLO. All right. This obviously is in the energy sector. It's oil and whatever they have their convenience stores or whatever they do with their gas stations. Now you have this pullback is still sort of this is a tough one. Here's the thing. This low, 55.85. This is kind of lower. This is not like a failed low. This is at 49.90. That's a decent break there. Okay? That's a decent break, and it's trying to recover. So that's a good sign. For something like this, there's two things that I would wait for on VLO. It's got to prove itself a little bit more. Now, the broader picture, obviously, this broader structure can result in a broader higher low, which is a good sign. Okay? But the thing is, this momentum may still be in play. So I want to see two things to prove that bearish momentum is no longer in play. First, we get a double bottom would be nice. So if we get that pullback and we retest 50.25, that would be one spot to consider. Why not buy it now? Well, you can, but the thing is, the risk you're taking is, this momentum, this bearish momentum may still be in play. Now, the other thing it needs to do to prove itself, if it can't produce that failed low, is produce a higher low, all right, and then take that and then establish the higher low, take out that high, and you'll have that in play. Or if it doesn't do that, it needs to take out this high right here, 60.25, to prove itself that this bearish momentum is over. So you may say, well, those are much higher prices. Why not buy it now if it's going to go there? Well, because the thing is, this bearish momentum may continue. Right, and it's very tough, and mentality is a very big part of this game. And you can't sit there and think you're going to make like every penny from a move. A lot of times the move needs to establish itself, which means you're not going to get the best price. People always want like the perfect prices. You're not going to get the bottom. You're not going to get the top. So what you want is structure to be in your favor and momentum to be in your favor, so that chances are you have a positive outcome, right? That's what's important, not, oh, I got the best price. So those are the scenarios that I'd be much more interested in VLO. Although this isn't bad, it's just I don't see anything solid there, right? It's just 50-50. It may go lower, it may not. I want to see some proof. Okay, so nice. Thanks for bringing that up. All right, let's see. Yeah, Reddit. So it's funny. Yeah, Reddit is just as uninformed, or I should say misinformed. I have a hard time believe small money in Robinhood accounts is moving. No, so pal, it's not small money accounts, but imagine if you have hundreds and thousands of them all doing something at the same time. That moves markets, because I mean, how do you think Tesla's at 1,700? I mean, it's people who are just chasing. It's not just market makers in this game. All that small money adds up when you have, I mean, they have like what? I don't know how many accounts they have. I think they have what, in the millions, I think. I don't know, but it's something really high. Just imagine if each one of those accounts just had $1,000 in it, okay? And that's a small account, $1,000. So you can only imagine. So as a group, that's why they're so significant. Okay, just like E-Trade and Ameritrade, many years ago. Okay, so how do you think BTC will react to a significant stock market retrace? Good question about Bitcoin. Well, I mean, initially, I don't think Bitcoin really, in theory, it should not really move that much. But if a lot of people are, if they get caught in the stock market pullback and they need to cover their losses, right, and they may use Bitcoin to do it. We saw that back in March, where Bitcoin had that vertical negative move, right? And then it came back, and it's just been kind of working its way higher ever since. So initially Bitcoin may react, but overall, I don't think, I don't really believe in the Bitcoin stock market relationship, because, it's there until it's not there. You know what I mean? So I wouldn't really put too much weight into that. Okay, UVXY in the podcast. Sure. Yeah, well, yeah, that's a big one with Andrew. He likes that one a lot. He does stuff with that. So we'll talk about that. Okay, cool, Ricky. So Zumiez is an apparel store for youngsters. Okay, and they are all, I'm not, okay, cool. I didn't know that about that Zumiez. That's nice to know. Is made, well, it was me, and yes, you're teaching me well. Oh, great, pal. Draw the trend line from the previous triangle structure on AXP. Kind of cool. Okay, cool. Right. Well, all right, cool. I'm just catching up here with the comments. Is it? Oh, 10 million accounts, DJ. That's a lot of accounts. That's a lot of accounts. Now, just imagine if each account had just $1,000 in it. And we know that they have, there's all different varieties of accounts. Some have $500. Some may have $10,000 in it. All right, but I don't know what their average account size is. But just imagine, that's a lot of money that, comes to the market in aggregate. And that's how you have to look at that, okay? And those are all retail traders. And retail traders, we are retail traders also. But that platform, that app has a reputation. And that reputation, just like E-Trade many years ago, is those traders they're just reacting to things. Those are not professional traders. So they're going to be more reactive, and they're going to drive markets further than the market should go, because they're all piling in. Okay, and when the markets get hammered, they're going to be piling out, right? And they provide liquidity. That's their purpose. That's what they do. And that's how the game works. Okay? When you're talking about Robinhood traders, it is about the platform they use. The platform happens to be, why is Robinhood so popular? It's a sentiment thing, Hamid. Robinhood is an app for your phone, right? So it's easy, for one, and everyone has it on their phone, just like Facebook Messenger. Everyone has it, or Facebook. So they're just reacting to things. They're reacting to news. It's not that they're I don't want people to misunderstand and think I'm calling these people dumb. It's not that they're dumb. It has nothing to do with intelligence. It has to do with their market experience and their understanding of how markets work. You could read books, you can go to websites, this and that, you could read all the news. They think information is news. but that's actually misinformation when it comes to timing. So because of that lack of knowledge, they're mostly going to do things at the wrong times, right? That's what and they're gonna behave in a herd, as a herd, like a herd would, because that's the herd mentality. Anytime you have a large group of people and they're uninformed and they're relying on emotions, they're emotional, they act as a herd. And that's, the herd is always, they always say the crowd is always wrong, especially at turning points. So why is that? Because they're reacting on emotions. They don't have a system. They don't have a method. They're all trying to follow, a stochastic or something or whatever. It could be just on news, whatever it is. Half of them could be gambling. I don't know. But as a group, they are a force, and they are a very emotional force. And emotions express themselves in patterns, right? Chart patterns. That's what technical analysis helps to measure and identify opportunities. Remember, someone has to take the other side of your trade. Who do you think is taking that other side when you win? Who do you think? Think it's a market maker? It could be, but most likely it's not. All right, right. What YOLO? I'm not sure what that means. It's probably like fear of missing out, right? Anyway, the point is, the thing is, most people don't have a lot of money. So, right, options, it's another thing. Look, at one time, many years ago, Forex was very popular. Okay, many of you may not remember that, but I was working for Forex.com at the time, and the stock market was not doing that great. Back in 2008, it had the financial stuff going on. So people were jumping into the Forex market like nuts because it was easy to access, no commissions, all this other stuff. They had no idea what they were doing. Okay, but in that case, the dealer was making all the money, not other traders. So the point is, when you have all this speculative money pouring in, they're just gambling mostly. But they do serve a purpose, because without new money coming into the market, it's harder for professionals to make money. It's like a poker table, okay? Do you want to go to Vegas and play poker there, or if you're as a professional poker player, or do you want to go to some table where everyone knows each other and they're all like experienced players? What table do you think you're going to make money at? A table full of tourists, or a table full of pros that just sit there and they know each other really well, and you're the new guy at the table and they're just going to rob you, right? It's the same idea. So just something to keep in mind. You have to understand something. Right. You have to understand something too about markets. Markets are a mechanism to transfer wealth. When you win, someone was wrong, obviously, right? And you're taking money from someone. Someone is losing money when you win. Many people, they don't realize that. Maybe they don't care about that. Maybe it's not an important thing to them. They just, hey, I'm making money, right? But the thing is, when you win and when you lose, someone is winning. So that's the way it works. So, when that type of thing is involved, emotions run high. And when people make emotional decisions, usually emotions don't let you see what's really going on, okay? They especially when you have a lot of money on the line and you're losing a lot of money, you're most likely to make emotional decisions. Professional traders know how to capitalize on that because the patterns are the same and the patterns repeat themselves. And that's what the basis of technical analysis is. We're looking at patterns, but what are those patterns? Those patterns are emotions in the market expressing themselves. When people are buying and selling, moving money around, they're doing it in an emotional way, and it has a pattern. It has a signature. And that's what we're looking for, right? And you can measure probabilities based on that type of behavior. So it's all about behavior and psychology. People think it's about intelligence. And people get wrapped up in, I'm not smart enough for the stock market. Oh, the stock market's about math. I'm not good at math. Has nothing to do with any of that stuff. Oh, the stock market, I have to be on top of the news. No, you don't. You don't have to be on top of the news. Okay? It's about behavior and psychology and understanding the herd psychology and mentality versus your own, because you are also a factor. You have to keep yourself under control. Okay, and that's a very not an easy thing to do sometimes. All right, anyway, so so I'm going to wrap it up. I'm talking too much, and I have the podcast I have to set up for. So I'm going to wrap this up. Thank you everyone for your great questions. I hope you found this video helpful. Again, if you're new to Greenbridge, make sure you check out greenbridgeinvesting.com. Make sure you check out our chat room, and we have our swing trade signals and our portfolio management ideas, and check out our track record. We do have a track record. So Again, and make sure you like the video if you found it helpful, and make sure you subscribe to the channel so you can watch more of these when I put these out. Again, I'm trying to make these more educational and more beneficial for you. And leave me a nice comment, okay? Anyway, so thank you all, everyone. I'll see you in the podcast in a little over an hour. If not, enjoy your day. Thank you for watching.